Tonight, as the ball drops on 2025 and we stare down the first sunrise of 2026, the air feels different than it did a year ago because the stock market has officially entered a new era where the old rules of just buying anything with the word tech in it no longer apply. We are standing at a historic crossroads where the S&P 500 is hovering near that psychological 7,000 level, and while the momentum of the AI supercycle has carried us this far, the question every single one of you is asking tonight is what comes next. How do we protect the massive gains we've seen in 2025 while still positioning ourselves for the breakout winners of 2026? Most investors make the mistake of either being too fearful and sitting in cash while inflation eats their purchasing power, or they are too aggressive chasing the latest meme coin or overextended semiconductor stock, only to get wiped out in a January correction. But tonight I am giving you a roadmap that balances pure, unshakable defensive strength with the kind of high upside speculation that can truly move the needle for your net worth. We are talking about a 3+1 strategy, three stocks that are essentially fortresses of capital, and one speculative moonshot that is currently sitting exactly where Palantir was before its historic run. Let's start with the foundation of your 2026 portfolio, a company that has completely redefined what it means to be a retail giant, and that is Walmart. Now, I know what you're thinking. Walmart is where your grandma buys groceries, but if you haven't looked at their balance sheet in the last 6 months of 2025, you are missing the most important transformation in modern retail. As we enter 2026, Walmart has officially become a tech company that happens to have physical stores. They just closed out a fiscal year where their global e-commerce sales surged by 27%, marking over 3 years of consistent double-digit digital growth. But the real reason Walmart is my top safe pick for 2026 isn't just about selling more boxes of cereal online, it's about who is buying them. We are seeing a massive demographic shift where households earning over $100,000 a year are ditching higher-priced competitors and flocking to Walmart for both value and convenience. This is a sticky customer base that isn't leaving even if the economy softens. Furthermore, Walmart has built a high-margin advertising business called Walmart Connect that is growing at a staggering 30% to 50% rate. They are using the data from millions of shoppers to sell ads, just like Amazon did a decade ago. With their integration of agentic AI into the shopping experience and a dividend that has increased for over 50 consecutive years, Walmart is the ultimate sleep well at night stock. It provides a massive floor for your portfolio while offering surprising upside as they continue to steal market share in the e-commerce space. In a world of uncertainty, Walmart is the king of the defensive offense, transitioning from the king of physical retail to the king of the digital world. Our second safe pick for 2026 is Amazon. If 2024 and 2025 were the years of the AI hype, 2026 is the year of AI execution, and no company is better positioned to monetize the infrastructure of the future than Amazon. We are looking at a company that is on a collision course with a $3 trillion market cap, and the catalyst is the incredible reacceleration of Amazon Web Services, or AWS. For a moment in 2023, people thought the cloud was slowing down, but as we sit here tonight, AWS has a massive $200 billion order backlog. Think about that number, $200 billion of guaranteed future revenue from companies that are desperate for the data center capacity to run their generative AI models. Amazon isn't just selling cloud space, they are becoming the landlord of the AI internet. They've invested over $100 billion in capital expenditures this year alone, building out the next generation of data centers powered by their own custom Trainium 2 chips, which are significantly more cost-effective than anything else on the market. While everyone else is fighting over NVIDIA's supply, Amazon is building its own destiny. And let's not forget the retail side. They have successfully regionalized their shipping network, cutting costs and making same-day delivery the standard across the United States. This efficiency is dropping straight to the bottom line, with earnings per share expected to jump nearly 20% in 2026. Amazon is the rare stock that gives you exposure to the AI revolution, the recovery of the American consumer, and the most dominant cloud platform on earth, all in one ticker. Our third safe pick is the backbone of the global financial system, JP Morgan Chase. As we move into 2026, the Federal Reserve is in a delicate balancing act, and there is no better pilot to navigate these waters than Jamie Dimon. JP Morgan is currently operating with what they call a fortress balance sheet, and they are proving that a bank can be just as much of a growth story as a tech firm. The reason JPM belongs in your 2026 portfolio is their absolute dominance in the higher for longer interest rate environment. Even as rates settle, their net interest income remains at record levels because they have the scale to outcompete every regional bank in the country. But the viral story for JPM in 2026 is their internal AI revolution. They have thousands of data scientists working on automating everything from fraud detection to wealth management. They are moving from the concept phase of AI into the earnings driver phase, where these tools are expected to add billions of dollars in efficiency gains to their bottom line over the next 18 months. With the S&P 500 predicted by Morgan Stanley and JP Morgan's own analysts to reach as high as 7,800 or 8,000 by the end of 2026, the financial sector will be the engine that drives that rally. When you buy JPM, you aren't just buying a bank, you are buying the smartest room of people in the financial world who are positioned to profit whether the market goes up, down, or sideways. It is the gold standard of stability. Now, we have built the foundation with Walmart, Amazon, and JP Morgan, but no viral portfolio for 2026 is complete without a high-conviction speculative play, the kind of stock that has the potential to double or triple if the catalysts align. That stock for 2026 is Rocket Lab. For years, investors have been looking for the next SpaceX, but SpaceX remains private and inaccessible to most retail investors. Rocket Lab, under the leadership of Peter Beck, has quietly become the second most prolific launch provider in the United States. They have already proven they can dominate the small satellite market with their Electron rocket, but 2026 is the year everything changes because of one word: Neutron. Neutron is their massive, medium-lift, reusable rocket designed to compete directly with SpaceX's Falcon 9. The maiden flight of Neutron is scheduled for early 2026, and if that rocket clears the pad and reaches orbit, we are going to see a fundamental repricing of this entire company. We are currently entering a $1 trillion space economy, and Rocket Lab is one of the only vertically integrated companies that builds both the rockets and the satellites themselves. They are already winning massive defense contracts and are becoming a favorite among the same retail crowd that propelled Palantir from $10 to $60. The speculative part of this pick comes from the technical risk of a new rocket launch, but the reward is a company that could become the primary alternative to the SpaceX monopoly. With rumors of a SpaceX IPO potentially happening later in 2026, the entire space sector is going to be under a massive spotlight, and Rocket Lab is the clear leader of the public pack. As we wrap up this 2026 roadmap, I want you to look at the symmetry of this portfolio. You have Walmart protecting you against inflation and consumer shifts. You have Amazon giving you massive exposure to the AI cloud boom. You have JP Morgan providing the financial stability and dividend growth that anchors your wealth. And finally, you have Rocket Lab, your ticket to the stars and the potential for life-changing returns in the new space race. This is how you win in 2026. You don't win by gambling on every penny stock you see on social media, and you don't win by hiding in a savings account. You win by identifying the structural shifts in the global economy, AI, data-driven retail, financial consolidation, and space infrastructure, and putting your capital where the momentum is already moving. The market in 2026 will be defined by the show me story. Investors will no longer reward promises, they will reward earnings, execution, and scale. These four stocks have all three. As the market opens for the first time in the new year, remember that the most successful investors aren't the ones who trade the most, but the ones who have the most conviction in the right names. Take a deep breath, look at the data, and realize that even with the S&P at all-time highs, the opportunity in these specific names is just beginning. We are heading into a year of incredible innovation and unprecedented market targets, and with this 3+1 strategy, you are no longer just a spectator, you are a participant in the growth of the future. Let's make 2026 the year your portfolio reaches escape velocity. I'll see you in the markets. Keep an eye on those Neutron test dates, watch the AWS backlog, and never bet against the American consumer at Walmart. This is our year. Which of these four are you betting on first? Drop a comment below and let's start the conversation as we enter the most exciting year in stock market history.